Welcome to this deep dive into the topic of insurance costs in California and how they are impacting the dream of homeownership. We often hear that California has beautiful landscapes, thriving cities, and a diverse population. But behind the scenes, many residents face a growing challenge that is seldom talked about: the skyrocketing costs of home insurance. Today, we are going to explore the top 10 California cities where insurance costs are making home ownership increasingly difficult. And we will unpack the factors behind these costs, so you understand why this is happening and how it affects homeowners and prospective buyers. California is a state that is prone to a range of natural hazards, from wildfires, earthquakes and floods to mudslides, and even occasional severe storms. This exposure to risk means that insurers have to factor in the potential cost of claims when setting premiums. Areas that are more prone to wildfires have seen exponential increases in home insurance rates over the last decade. In some neighborhoods, rates have doubled, tripled, or even quadrupled in a short span of time, causing many homeowners to reassess whether staying put is financially feasible. This trend is especially pronounced in regions that are adjacent to forested or hilly areas where wildfires are common. Starting with the city of Los Angeles, which is perhaps the most iconic city in California, it is also one of the places where insurance costs have been steadily rising. The combination of high property values, dense population, and wildfire risk in surrounding areas has created a perfect storm for insurance premiums. Homeowners in certain parts of Los Angeles have reported rates that are significantly higher than the national average. The insurance companies often segment the city into zones, with some areas facing premiums that can easily exceed $10,000 a year for a standard home. This is not only a challenge for current residents, but also for new buyers who are trying to enter the market. The question that many ask is how much of this increase is due to actual risk, and how much is a reflection of the overall rising costs in the insurance industry. Next, we turn to San Diego, a city known for its beautiful beaches and mild climate. But even here, insurance is a growing concern. San Diego may not have the same wildfire risk as Northern California, but it faces other challenges, including earthquakes and coastal flooding areas that are near the coast or in canyons can see home insurance premiums climb significantly. Higher risk zones may require additional coverage, which adds to the overall cost. This has led some potential buyers to consider properties further inland or in less desirable areas, simply because the cost of insurance can be prohibitive. Moving north, we have the city of San Francisco, a place famous for its hills and iconic architecture, but also infamous for earthquake risk. The city sits near the San Andreas Fault, and historical data suggests that a major earthquake is not a question of if, but when. This seismic risk drives up insurance costs significantly. Many homeowners require specialized earthquake insurance, which is separate from standard homeowners insurance and can be very expensive. For high-value properties, the total cost of combined coverage can easily add tens of thousands of dollars annually, making home ownership in certain neighborhoods a luxury that few can afford. Oakland is another city where insurance costs are creating financial pressure. Oakland shares many of the seismic risks of San Francisco, but also faces additional challenges with older housing stock and urban development patterns that make fire and water damage. More likely, insurance companies assess these risks carefully, and homeowners in Oakland are often confronted with high premiums for standard coverage. Many families in the city find that the cost of insurance must be factored heavily into their overall monthly budget, alongside mortgage, property taxes, and maintenance. Sacramento, the capital city of California, has also seen a surge in insurance costs, particularly in suburban areas that are expanding into regions that were previously undeveloped. The combination of wildfires in the surrounding hills and the rapid pace of construction means that insurers must price policies to reflect higher risk. Many new homeowners are surprised to find that the cost of insuring a home can sometimes rival the cost of their mortgage, leading to difficult decisions about affordability. Moving to the Central Coast, we have Santa Barbara, a city that is beloved for its Mediterranean climate and stunning coastline, but is also highly susceptible to wildfires. The hills surrounding the city are covered in vegetation that can become highly flammable during dry seasons. Insurance companies have responded by significantly raising premiums for homes in wildfire-prone zones. For residents, this often means choosing between investing in expensive insurance or accepting a higher level of personal risk. Some have turned to risk mitigation measures, such as defensible space around their homes, but even with these precautions, premiums remain high. Ventura is a neighboring city that faces similar challenges with wildfire and urban development patterns that increase potential damage. In Ventura, the combination of high property values and high risk of fire has led to some of the highest insurance costs in the state. Homeowners often have to shop around extensively to find coverage, and some insurers may even refuse to insure properties in certain high-risk neighborhoods. This has created a situation where the housing market can be unpredictable and prospective buyers must weigh insurance costs as heavily as purchase price. Further north, we come to Santa Rosa in Sonoma County, which has been hit hard by recent wildfires. The devastating fires of the past decade have left a lasting impact on insurance markets. Many properties that were once easily insurable now face premiums that are several times higher than before. These increases are based on actuarial data that shows the high probability of future claims. The financial burden has led some residents to sell or relocate, while others must absorb significantly higher monthly expenses to maintain coverage. Fresno in the Central Valley is an interesting case because it is not immediately associated with wildfires or earthquakes, but insurance costs have still been rising. There are several contributing factors, including increased frequency of severe weather events and changes in regional water management, that can increase flood risk. Certain neighborhoods near rivers or with older infrastructure face elevated premiums. This highlights that insurance costs are not solely dictated by headline disasters, but also by localized factors that affect risk assessment. Lastly, we look at Riverside in the Inland Empire, which has experienced rapid population growth and suburban expansion. This growth has led to more homes being built in areas that were previously open land, increasing exposure to wildfire and other environmental risks. Insurance companies respond to these changes by adjusting rates to reflect the new risk landscape. For many residents, this means that the initial affordability of a home can be quickly offset by high annual insurance costs, making long-term homeownership less viable without careful financial planning. It is important to understand that the factors driving high insurance costs are complex and multifaceted. They include natural hazard exposure, property values, local construction trends, regulatory environment, and broader market conditions for insurers. When discussing these top 10 cities, it becomes clear that no single factor can explain the trend. Instead, it is a combination of environmental risk, economic factors, and insurance market behavior that creates a challenging landscape for homeowners. For the average viewer, it is worth noting that these insurance costs are not static. They can change based on new legislation changes in building codes and disaster mitigation efforts. For example, cities that invest in wildfire prevention and community safety programs can reduce risk over time, which may lead to lower premiums. Conversely, climate change and urban expansion may continue to push costs higher in the coming years. Home buyers and current homeowners in California should approach insurance with a strategic mindset. Understanding the specific risks associated with a city neighborhood and property type is crucial. In some cases, investing in risk reduction measures such as retrofitting homes for earthquakes, installing fire-resistant landscaping, or implementing advanced flood defenses can help control insurance costs over time. However, these measures require upfront investment and careful planning. Insurance companies themselves have become more sophisticated in assessing risk. They use satellite data, predictive modeling, and historical loss information to determine premiums at a granular level. This means that even within a single city or neighborhood, premiums can vary dramatically based on micro-location features such as proximity to hills, bodies of water, vegetation, density, and construction quality. Homeowners are therefore encouraged to explore multiple insurers and coverage options to find a policy that balances cost with adequate protection. Another important consideration is the difference between standard homeowners insurance and specialized policies. Such policies may cover earthquake, windstorm, or wildfire damage that is excluded from traditional coverage. California homeowners often need multiple policies or endorsements, which can complicate budgeting and financial planning. For prospective buyers, these additional costs must be factored into the overall affordability of a home. It is also notable that some cities have seen insurers withdraw from high-risk markets, entirely leaving residents with fewer options. This market contraction can further drive up prices for those who remain in the insurance pool and creates a sense of uncertainty that affects housing decisions. In response, local governments sometimes implement programs to stabilize insurance availability, but these measures vary in effectiveness and scope. Ultimately, understanding the intersection of environmental risk, property values, and insurance market behavior is key to navigating homeownership in California. Residents who stay informed about trends in insurance costs can make better decisions about where to buy, how to protect their property, and how to plan for long-term financial stability. While the beauty and economic opportunities of California cities remain attractive, the rising cost of insurance is a reality that cannot be ignored. By examining Los Angeles, San Diego, San Francisco, Oakland, Sacramento, Santa Barbara, Ventura, Santa Rosa, Fresno, and Riverside, we gain insight into how natural hazards and market dynamics combine to shape the affordability of homes. Across these cities, the pattern is consistent. Higher risk exposure translates to higher premiums, and this has a cascading effect on the overall cost of living and housing affordability. The challenges faced by homeowners in these cities are indicative of broader trends that affect the state as a whole, and highlight the importance of careful planning and informed decision-making when it comes to real estate. Insurance costs in California are therefore not merely an additional expense. They are a critical factor that influences housing choices, financial stability, and community resilience. They impact both individual homeowners and the larger housing market, creating ripple effects that shape the demographic and economic landscape of cities. Those seeking to buy or maintain a home in these regions must consider insurance as a central component of their financial strategy. Through this detailed look at the 10 cities where insurance costs are affecting homeownership, we can appreciate the complex interplay between environmental risks, urban development, and market behavior. By understanding the reasons behind rising premiums, residents can take proactive steps to manage risk, explore coverage options, and make informed decisions about their homes. The story of California home insurance is a story of adaptation, resilience, and the constant balancing act between risk and reward as residents strive to protect one of their most important assets, their home.